Good morning, XRP community. The tape just flashed its clearest signal in weeks. On-chain dashboards show about 250 million XRP accumulated over the last 48 hours. At roughly $3 per token, that's close to $750 million of demand. Today we unpack what that means, the two levels that matter most in the next 24 hours, $3 and $3.15, and the path that opens if those break cleanly. A run toward $3.60 and potentially a test of $4 during October. Let's start with price and positioning. XRP is stabilizing just below 3 after yesterday's push to the high 2s. The structure is simple but critical. Step 1 is a firm reclaim and hold above $3 with rising spot volume. Step 2 is a decisive push through $3.15, ideally on expanding volume and stable, not overheating funding. Clear both, and the market will start to price in a move to the next resistance band around $3.60. Above that, the psychological magnet at $4 comes into view. The catalyst behind this setup is accumulation. Large wallets absorb supply during the recent dips, and you can see it in the on-chain footprints. Exchange balances edging down, block size transfers into cold storage, and higher quality bids showing up at round numbers. It's not magic, it's mechanics. When big buyers commit size, volatility compresses, pullbacks get bought faster, and the path of least resistance tilts higher, until proven otherwise. Zooming out, the broader market is giving us a very specific backdrop. Bitcoin remains firm around the 118 to 119,000 area. Ethereum trades near 4,400, and several high beta altcoins are printing outsized gains. Scash has posted a sharp daily surge. Verge is up strongly, Stellar is advancing, and Hedera is recovering. Here's why that matters. An Altseason that follows a strong Bitcoin often runs hotter, not colder. The higher Bitcoin climbs before the rotation, the more aggressive the alt move can be once capital starts to flow down the risk curve. Mid-roll call to action. If you want a simple PDF with the exact levels and validations and a quick checklist for confirming the breakout, price structure, spot volume, funding, and exchange flows, drop the word levels in the comments. We will prioritize it for the next update. Back to XRP's immediate roadmap. Think in stages. Stage 1. Reclaim $3 and hold it through a full session close. That tells you demand can defend a round number, and that breakout attempts are not just wicks. Stage 2. Pierce $3.15 with conviction. This level matters because failed rallies often stall here. A clean break converts it from resistance into support and gives the market a new floor. Stage 3. Attack the $3.60 band. This is where trapped supply from prior attempts tends to sit. If the breakout is real, you want to see increasing spot volume, rising open interest that isn't pushing funding to extremes, and net outflows from exchanges after red hours. Only after those steps does $4 become a live target. Do not skip the checkpoints. The strongest trends respect them on the way up. Now the utility thread that keeps showing up in the data. Stable value rails are expanding globally, and reports point to Ripple's dollar-based stablecoin gaining new corridors, including in underbanked regions where remittances and mobile-first finance dominate. That matters for XRP because a broader stablecoin footprint tends to raise cross-rail settlement needs. When tokens move across jurisdictions at higher frequency, a neutral bridge asset with fast finality and deep liquidity becomes more useful. In short, real-world usage grows the pool of transactions that benefit from XRP's settlement profile. Let's talk risk, because every breakout has failure modes. First, watch $3. A sharp rejection with rising funding and falling spot volume is a red flag for a stop run lower. Second, if open interest spikes while price stalls under $3.15, the market is setting up for a squeeze rather than a true continuation. Stay patient. Third, monitor exchange flows. Large net inflows during Asia or US hours often precede supply overhang. Large net outflows after red sessions are constructive. Cross-asset signals help too. If Bitcoin squeezes higher while dominance rises sharply, altcoins can lag on the first push. That is not bearish, it's staging. The cleaner alt rotations tend to appear after Bitcoin cools and funding normalizes. If equities hold firm and gold stays bid, it tells you investors are both reaching for growth and hedging policy risk. Fertile soil for selective alt leadership once the calendar catalyst hit. So what do the next 24 to 48 hours look like in practice? Expect tests of $3 and $3.15, headline-driven swings, and fast rotations on intraday timeframes. Your edge is preparation. Decide in advance where you add and where you step aside. Respect the signals. Higher lows with rising spot volume and steady funding support continuation. Lower highs with fading volume argue for patience. This is not about predicting the future. It's about reading the tape as new information lands. Before we close, a note on the narrative that something is being planned. Markets don't need conspiracies when incentives and liquidity tell the story. We have a confluence, sizable whale accumulation, a seasonal tailwind into October, and an expanding real-world payment stack that increases the utility case. If those threads hold, the technical path we outlined, 3, 315, 360, then 4, stays in play. If they break, we will say so here and adjust the roadmap. Final call to action. Comment with your next key level, 3, 315, 360, or 4, and the indicator you trust most right now. Funding, open interest, or exchange flows. If you want that quick levels and invalidations one-pager for the October setup, type levels, and we will deliver it in the next update.